Hello everyone and welcome to this morning's webinar and thank you for being patient. A little bit late, a few minutes delay, but mainly because we were trying to sort out the recording. However, before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be very risky, so please don't ever think of using money that you cannot afford to lose. Now, I know some of you may have seen the following slides before, so just bear with me because I know we've got a lot of new people in the room, but I will whiz through them very, very quickly, I promise you, because there's lots to have a look on the charts. There's lots going on today. Very, very important day, particularly for the Euro and the ECB, and you know, we just want to get that to as quickly as possible. However, this is me with my husband David, and together we'll be running this webinar, and we'll be looking at the market through the prism of volume price analysis, which is our own methodology, and using our quantum trading software tools. Volume price analysis, if you're not aware of the methodology, it's all explained in books that are up on Amazon. It's the technical analysis picture, the chart analysis that we use, where basically we use price action and volume. But for the Forex markets, and in fact all the other markets, we also have to take into account what the fundamental picture is telling us, and also look at related markets. And really the best way to explain it is to you know, see it in action in the currency pairs that we will be looking at later this morning. But everything is also explained, as I said, in the books on Amazon, and we've actually put it together in what we call the Forex Trading Library, which I think is $9.99 on Amazon. It's a digital version, not the not hardback copies, but you can buy hardback versions of the individual books. When I talk about related markets, relational analysis, cross-market analysis, it basically means looking at what is happening in the other capital markets. That's the equities, bonds, commodities. Forex very much sits in the middle. So currency and currency pairs will move. They react, if you like, to what is happening in equities. If there's a risk on appetite, sentiment, you will find the Japanese yen will be selling. If there is no appetite for risk in the market is very nervous and worried for whatever reason, you will find that traders and investors will buy the Japanese yen and the Swiss franc. So the individual currency pairs and currencies themselves have this relationship with other markets, and really once you begin to understand these relationships, it will improve, it will increase your confidence as a trader. And we explain all this. We've actually put a very comprehensive program together for Forex trading, where we talk about volume price analysis, the fundamentals, the relational analysis, the psychology of trading, etc. It's a hugely comprehensive program where we sort of bring it all together, and the knowledge and skills that you gain from the program, they're with you for life. You know, it's not something that you buy, you know, you learn and then you forget. You can then apply them to not just Forex, but other markets as well. In terms of the tools, we have developed specific ones for the Forex markets, and this is the 4 that comprise the currency dashboard. You'll see them in action as we go through the webinar, and the details of the tools, the currency dashboard, and all the others that we've developed are from quantumtrading.com. You can buy one, a bundle, or the full package. There's lots of advantages for having the full package, primarily because when you buy the full package and we develop new ones, they're automatically added to your package for free. So you never pay us any more money. You get 24/7 support, and all upgrades are included. And there's also a 7-day money-back guarantee. MT45, NinjaTrader, TradingView, and we are now working on TradeStation. Details of the software you can find at quantumtrading.com. So just hop along there. All the prices are there. Videos on the individual indicators, how we develop them, why we develop them, and how you can, some ideas of how you can apply them to your trading. The Complete Forex program, as I said, it does include the complete package of trading indicators. If you've ever bought anything from us, either one indicator or 1 or 2, and you then want to upgrade to the program or the full package or whatever it is, you will always be credited for whatever you've paid us. And the website for that is quantumtradingeducation.com. These are the 5 modules, and as I said, it's really just, you can go to the website and it just explains what you get for in the program. My own site, annacooling.com, is where you can catch up on my analysis of the markets in general. Everything Forex related is handled by my Forex Learn Forex Trading Facebook page. This is a commodities page, a stocks page. So it's where I put I use VPA to deconstruct the market and just generally sort of, give as much as I can to traders so that they can try and make sense of the financial markets and make some money, hopefully. So there we are. Let me just pull that down and pull up the charts that we will be looking at today. Today's ECB day, if I quickly go over to a Forex Factory, we can have a look. Where are we? Here we are. There we are. This is the calendar for today. The main event is this one, which is the, as I said, it's the ECB. What is Draghi going to do with the interest rates? They're already on zero. Is he going to go into negative rates? Really, we have volatility around this because there's a lot of speculation of really how deep he's going to go into negative rates, or is he going to go into negative rates? Is he going to be allowed to go into negative rates? And then we have the press conference in which he explains what he has done, the reasons why he has done what he has done. The reason this meeting is particularly, they're always important, but it's particularly important today is, first of all, he's leaving. So I think this is the penultimate one, David, isn't it? Has he got one more before he hands over to Christine Lagarde? Secondly, the whole issue of negative rates, and there's a lot of politics around that. The Germans are certainly not happy with, with more QE, negative rates, etc., etc. But there's also another factor to take into account, and that is what is actually what is the reaction going to be in Washington? Because, as you know, Donald Trump has been having a go at the Fed, and why the US is. Let's have a look at the interest rates, and you can see why Donald is so upset. These are the current interest rates for all the major central banks, and we have the Fed here is still at 2.25. When you look at the ECB, that's 0, and if it's going to go into negative. Here in the UK, we have 0.75. We've got the Swiss minus 0.75, and you can see, until you go into the emerging markets, we can see here we've got Russia at a fantastic 7%. You've got India at 5.4. You've got China at 4.35, and you've got Brazil at 6%. What he feels is this is completely out of whack with the other G7s, the Euro, the Bank of England, etc., etc. So he's not happy with the Fed. Now, if the ECB and Draghi go ahead with more into negative territory, it's going to potentially weaken the euro even more. The euro has gone through some significant support levels. If you're a euro trader, you will know, and we will look at the charts. If he pushes that even further, even lower, Washington is not going to be very happy, and the danger is, or rather the exporters in Europe, they'll be happy on one side because it makes their products cheaper, but will that actually draw the EU into the tariff dispute that the US is having with China? In other words, will Washington retaliate because they feel that the euro is being deliberately driven even lower, as it were? So it has a huge political significance today. Now, from a technical perspective, it really depends on what sort of timescale you as a trader are looking. I'm actually short. I'll put my hands up and say I'm actually short euro. I've been short euro dollar, and I've actually been short euro Aussie for some considerable time. So if we look at the euro dollar chart, let me just take off the levels that I have on.
Nice moves going on euro Aussie.
Okay, there's a nice move. David said it had a nice look on a nice move on the euro Aussie. We've had a bit of a short squeeze in the move lower, as we can see here, this is the move lower. In fact, the move lower was down from the volume point of control at 12.10. Then we had this hammer candle come in here where we had a certain amount of buying, and we can see here, then we had some more weakness coming in. And it's really been moving sideways, and now it looks very bearish once again, potentially on the assumption that Draghi is actually going to deliver what he's kind of been hinting that he's deliver, i.e. more stimulus, more and perhaps negative interest rates. Draghi has a habit of saying, talking big, as it were, in the run up to these meetings, but when push comes to shove, he actually kind of disappoints traders because he doesn't actually follow through. That's primarily not because maybe he doesn't want to do it. The ECB is very different from all the other central banks. It's constrained by, what the member states want, and in this case, particularly Germany. Germans do not have they're very fiscally very prudent. They run a huge surplus, which is actually counter to the EU rules, but they seem to get away with it. They have the biggest economy in the EU. So really, whatever he may say in public, you have to judge him by his actions, and sometimes what he says and by his actions are very much at variance. Now, depending on how long you are in a trade or what your time horizon is as a trader, today you could, if you're an intraday trader, you may decide, well, I'm actually going to wait for all the hoo-ha to die down, and then I'm going to fade and try and get some pips on once the reaction has died down. If you're like me, you've been holding positions for some time, it's actually quite a key point. I've got some nice profit in my account, and given what's going on in the background, do I close out? Do I say, well, this is only, if it doesn't deliver, then the euro will strengthen. If the market expects a deep cut in interest rates, more QE, and that's all negative for the euro, but it doesn't quite do that, then we can expect the euro to be bought. There's a lot of buying came in under this candle here that we see under this hammer candle. And we'll talk about VPA signals as well, because VPA signals appear on a chart, but they don't always, it's not always on the second or third candle that they develop. And a great example of that has been on the Aussie yen. So as I said, that's just the euro dollar. All the euro pairs have different connections to different aspects of the market. What I'm trying to say is, on the euro pound, for example, that is reflecting pretty much what is happening with Brexit at the moment. Lots of confusion. Is it going to go? Is it going to happen? Isn't it? Or perhaps not going to happen. But I really want to focus on the euro today, given what's happening with the ECB. I'm just going to go to the euro dollar. I've been short euro Aussie for some time. I've got multiple contracts on this. I'm really happy with the position on this one. As we can see here, this is the hourly chart. It's been falling quite heavily overnight in Asia, primarily because it's driven by buying of the Aussie on improved risk sentiment. Again, this understanding of this connection between the the different sectors of the market. So I'm going to pass over to David, because I think he's been monitoring something on a short-term basis. David? Yeah. On a short-term basis. So I'll just move over to it. And if you've got any questions on anything we've got to say on the indicators, how we use them, please just put them in the chat box and be more than happy to answer them for you.
Thanks, darling, and good morning, everyone. Very warm welcome. Well, good morning here anyway, maybe middle of the night where you are, or late afternoon, but you're more than welcome and good to have you with us. Just going to show my screen, click on that, and hopefully you can all hear me loud and clear. Just move the chat box out of the way, get that down the side. I've actually started with the Renko. This is on Euro Aussie. This is the Renko Optimizer on NinjaTrader, which actually delivers the optimal brick size. So instead of you having to choose, you simply select the time frame you want. I've got it on 1 minute here, and it automatically delivers the correct brick size, the optimal brick size for trading that particular pair in that particular time frame. As I say, we're on the 1 minute here. You can see the trade that's developing. This has been developing pretty much since we got up early doors. And the beauty of using a Renko chart is, first of all, you can see the trend monitor at the bottom here. We've had a minor transition here, but other than that, there's not a flicker of a change in terms of the bearish sentiment, which has held throughout this phase of price action, which this is 716. So roughly we're talking what, just over an hour, hour and a half here, right across the chart, and it's just developing all the time, further weakness coming in. And as I say, on the trend monitor takes a considered view of price action. And what you see with the trend dots here is the trend dots work very close to the price action. They will change first. And then if there is any change in the longer term trend, then the trend monitor will reflect that. So it's a great way of using the two in combination. As you can see here, we went into a little bit of blue, the trend dots. They also moved above the price action. And then they move back above the top. They move under here, then they move back above. And now they're pressing down, changing to red. Again, here we got a little pause. Trend dots transitioned into blue. We had a grey one here of congestion. Then we're back out the other side again. This one went to the bottom, but never went up any further than that. Then we're back over the top again. The trend dots pressing down. More pressure to the downside. Little bit of transition here into a grey again, back up to the top and then down to the bottom again. And we've got a little pause point coming up here. In addition to that, I've got the pivots here operating, which just give a signal to short-term intraday bearish or bullish price action. If they're above, they tend to be pressing down. If they're below, they're obviously supportive, which is what we're seeing right now. And in addition to that, on this particular indicator, I've also got the accumulation distribution indicator, which works on price. So it's looking at price in the conventional way from support and resistance regions which have been tested very strongly and held, and which then are breached and become the inverse, either support becomes resistance or resistance becomes support. And the thicker these lines are, then the more developed those regions are. So where you've got these little numbers 1, that simply means that that area has been tested once and is therefore very thin, very narrow, the line. This has been tested twice, so this is an area which is a little bit stronger. This one up here has been tested 5 or 6 times, so it's a much wider line. And it's just a feature of the accumulation distribution indicator, which to say works on price. And it just gives you an instant visual on which areas are relatively weak and which of those are relatively strong. Just go back onto the time-based charts, multiple time-based. There we are. This is the Euro Aussie. Across the top, I've got the 1 minute, 3 and 5, and down at the bottom, I've got the 10, the 15, and the daily. Pull up the daily. There were several signals that came in. This is August we're looking at here. So this is July through to August, and this is where Anna really started to develop the position, because the initial signs, we got a big volatility up trap on the day. Then it was followed by a huge signal of weakness, not massive volume under that. So clearly it's a trap move, but nevertheless a sign of weakness from a price-based perspective. Various volatility through here, a lot of whipsaw price action, bearish engulfing. And then we had this candle here, a ton of volume underneath, heavy selling in that candle, big wick to the upper body. And you know for a fact that this is really reinforcing the fact that we've got volatility here. We've got a trap move up here. The market makers are selling out on this candle. And that's where I started to develop the position. And she also scaled into it. I think from memory, once it started to break through, I think it might have been this region here. Once we're through that level, we've got a really nice top in place, and we're starting to build from a price-based perspective through this, what was at that point a platform of support, and now is obviously a ceiling of resistance as we move to the downside and developing the momentum. The trend monitor transitioned through to reflect that, as I say. It didn't do it instantly, it never does. It's looking at that transition in a more considered manner and building the position and scaling into this position, and it's been developing nicely ever since. And in addition to that, as we move through into the volume point of control, this histogram down here, this is the volume point of control at the time. It's still anchored there. That was the fulcrum of the market. In other words, heaviest volume and the point at which the market was in price agreement. We're now breaking down through these regions. We've gone through this high level of high area of volume, and we're now breaking lower into a low volume area of what acts as either support or resistance. And volume, this volume histogram works in exactly the same way as it does with price-based support and resistance. You look at volume in the same way. So where you've got a price that's approaching a low volume region as here, then the prospect is that the price will move through there pretty rapidly, because there's very little in the way of volume to act as support. Conversely, if the market was roaring higher and was getting up to this level here, again, you've got very light volume. The volume's falling away the whole time. So if the market's rising to the upside and you've got volume falling away, that's a positive sign, because there's very little in the way of old orders, people with stop orders, stop limit orders, whatever they may be. There's a whole bunch of people trapped in weak positions, because when the market condenses and congests in a region, then volume builds. And in that volume building, there are all sorts of old orders which are left, traders left in weak positions, hoping the market will rally and reverse against, and they can get out of the market, maybe at a small loss, certainly at a smaller loss than they were looking at, and so on and so forth. So these regions are so important. So as we get down to this level, we're at 59.91 at the moment. So there's another 100 pips as we develop through into this light volume here. Clearly, the price action today will be hugely influenced by whatever Draghi says, as Anna's mentioned before. Using the trend monitor, you can see here on the faster time frames on 1 minute, we've got a minor transition coming here. The market's kicking up a little bit. No change on 3, no change on 5 for the time being. You wouldn't expect it, and certainly not down here either on the slower time frames. Just go back onto, let's have a quick look at the currency strength indicator and those indicators. Sorry, that's on the matrix. I'll come back to that in a minute. This is currency strength on 5. You can see the reason why the euro is starting to pick up a little bit, because it's been heavily oversold through this phase of price action. This is 7 o'clock, so roughly the same sort of time frame. And also bear in mind, we're now coming up, we've got 5 minutes to go to London. It's the classic crossover period. It's the point at which the market makers will take the opportunity to whip the price action around, to trap traders into weak positions. It's just a very, very simple mechanism to make a ton of money very quickly at the crossover, because most traders are totally unaware of what's going on. So as I say, you can see the euro here, the orange line, it's very heavily oversold. It's starting to kick up a little bit. The Aussie, the blue line, we've seen a lot of heavy buying of the Aussie, certainly on the slower time frames. I'll go on to the Aussie yen in a moment. That's just starting to kick down a little bit. The dollar's selling off a little bit. We've got some pretty strong buying in the Swiss franc that's been going on for much of the early morning. Just have a quick look on the 10-minute. Same situation here. So the euro is getting down into oversold, and on 15 we're not quite near that. So if you're if you're looking for a reversal trading opportunity, and you're looking at this particular scenario in terms of 15-minute time frame, then from a buying perspective, you'd certainly be looking maybe at the pound, which is starting to kick up. You've got the euro, the dollar down here as well, and up at the top as a counter currency, you've got the Aussie and the New Zealand yen here. And you can see the Canadian dollar here still selling off pretty strongly. Just head on to the currency matrix here. This is on 5. I've got the 5, the 10, and the 15. Haven't got that isolated out. Just sorry, that's on 60. Let me just drop that down to 15. I was doing something else a minute ago. So if we go back onto the 10 and onto the 5, I've isolated it out with the toggle buttons here, and you can see earlier on this was stacked up almost universally. So we had pretty much all the euro pairs sitting on the bottom here. They're now starting to lift a little bit, because we're starting to see that transition intraday at any rate from the heavy selling of the euro, which is now starting to be reflected in terms of a little bit of buying coming in. And what the matrix gives you, it gives you that perspective. It gives you a perspective on sentiment in terms of whether the euro is being bought or sold universally. And if we see some universal buying coming in, then all of these will start to rise together. And ultimately, if it develops right the way through to a full-blown reversal, they'll end up at the top here, because you're seeing buying of the euro and selling of the counter currency. That's on 5. Just drop onto 10. Oh, sorry, there we go. There we go. On 10. And what you're seeing there is really a reflection of how this is perceived in terms of the currency pairs, as opposed to the currency itself. On the CSI, you see whether the euro as an individual currency is overbought or oversold. And what you're looking at in terms of the matrix is how that is reflected across the pairs which make up that matrix. So these are all the 7 pairs of the euro. And then as that sentiment shifts, as you see the euro starting to be bought on the currency strength indicator, then you're going to see that reflected in terms of the currency pairs themselves. And we're seeing this most strongly reflected up here. You can see the Euro CAD is the one that's moving pretty strongly in terms of Euro buying and CAD selling. And that's predominantly because, as I highlighted on the CSI, the Canadian dollar, unlike the Aussie and the New Zealand dollar, is actually selling off quite strongly. And hence the reason you're seeing a much stronger move in this particular pair than you're seeing in the, for example, in the Euro Aussie and the Euro New Zealand, where that is purely being driven, this move higher, this little move higher is purely being driven by some Euro buying at the moment, whereas this pair is being driven both by a modicum of Euro buying, but more heavily by the Canadian selling. And it's always something you have to tease apart in when you're looking at these pairs is, what are the drivers? Is this move being driven by one currency, or is it being driven by both? If it's being driven by both, as here, then you're going to get a stronger trend than if it's purely at the moment just being driven by one. You can see these lifting off the bottom now as I'm talking, as that Euro sentiment is shifting. Bear in mind, this is intraday, this is 10 minute. From a longer term perspective, daily chart, for example, is still heavily bearish. Just head up onto 15, haven't isolated these out, so let's just do that. Click on the button there, and there you can see pretty much a similar picture on 15. So it's being reflected across the time horizon, if you will, of this Euro, this modicum, this minor Euro buying, which may well develop, and obviously be looking at the charts to get a feel for that. But you can see it, how it's ranking these pairs and whether that sentiment is also reflected across the complex. If it is, they will all move up together. But on occasion, and this is the power of not only the matrix, but the other indicators as well, it will tell you that if you're trading euro dollar and you're buying the euro, is that sentiment universal across the complex? In other words, is everyone else buying euro and selling dollar? If they're not, it may be an isolated move. You need to know that because the risk on that trade will be that much higher. But if the market per se is buying euro and selling dollar, or buying euro, then that's fine. The risk on that is lower because you are trading with the universal flow. The analogy I always use is that of a river. If you are trading with everybody else, in other words, the flow is going one direction, the risk on the trade is lower. If you are trading counter to that, in other words, you're paddling your canoe in the opposite direction, it's going to be hard work and the risk is going to be that much higher, because if everyone's selling euro and you're buying it, you need to understand that. It makes sense. It's just common sense. Just head over onto the arrays. Here we are. I've got the euro isolated out here. And as you can see, we've got Euro New Zealand, Euro Swiss, Euro Aussie. So it's pretty much the same picture. What this will also show you is the strength of trend as these develop. So the steeper the line, the stronger the trend will be on those particular pairs. And what it also does, you'll see this change in sentiment. You'll see all these start to sweep to the upside or sweep to the downside. And again, it gives you a perspective on the sentiment that is reflected in terms of the individual currency. And in addition, on the right-hand side here, you've also got a second ranking ladder, which gives you a perspective on overbought and oversold from the currency pair, as opposed to that position on the currency strength indicator. The currency strength indicator looks at it from the individual currency perspective. You then go off to the charts and the other indicators to tease out which pair you particularly favor, whereas the currency array gives you that perspective from the currency pair. And as these are highlighted in brackets, the blue with the overbought and the red with the oversold here, and once these go to lighter colors without the brackets, then those currency pairs have reached a position of potentially being overbought and oversold, and obviously you then move off to the chart and have a look at it from that perspective. Just want to go over to the currency heat map. What I've actually done on the currency heat map, this is attached to the Aussie dollar. I'll come back to the Aussie in a minute because it's been a fantastic trade over the last couple of weeks, pretty much across all the Aussie pairs, and particularly across the yen complex. So this is attached to an Aussie dollar chart. This is why you're seeing this particular price action down here, which is very similar to the Aussie yen. But the reason I've highlighted it is because if you were here, I think 2 or 3 weeks ago, we pulled up the heat map, and all the yen pairs were stacked up pretty much across the bottom here universally, giving a strong clue that what we were about to see was a potential reversal in sentiment for the yen, which indeed has been developing. And that's why you're starting to see this scatter effect of all the yen pairs, which are, the Aussie yen here has been moving strongly, CAD yen up here as well. That's been a great move too. And they're all lifting off the bottom. The only one that isn't is the pound yen. And the reason the pound is still anchored, if you will, in a bearish phase of price action is purely because of Brexit. But as you can see, as you scan across the matrix, you can see here these cells. But perhaps more importantly, the cells over here, these are the slower time frame cells of the hour, the 4 hour, and the daily. And the impact of that is that as the ranking ladder is constructed up here, it is weighted. So the slower time frames carry more significance in terms of the ranking of the pairs themselves, which again is common sense. It's what you'd expect. If you get some bullish sentiment here on the 1 minute and the 5 minute, you wouldn't expect that to have a greater impact than if we see bullish sentiment here on the hourly and the 4 hourly. And that's how basically this ranking works. It's all weighted by the time aspect of these particular pairs. And what's been happening over the last couple of weeks is that the sentiment towards the yen pairs has been shifting to bullish, and gradually these cells have been turning green. When they were down at the bottom, they were pretty much red throughout, and that sentiment now is rippling through. And if this develops further, then it will trickle through into the weekly, and ultimately for an even longer term trend, it will trickle through into the monthly. But that is what we're witnessing at the moment in terms of the yen complex on the currency matrix. Just go back onto the time-based charts again. There we go. And that's what we're seeing. We've seen this reversal. This is 8 o'clock. This is London time. And invariably what we see at the cross-session crossover is, excuse me, I'm just going to switch off for a moment. I had a frog in my throat. Is either one of two things. Well, three things actually. First of all, we're going to see an increase in volume, because that's what we always see at the London opens, because it's the deepest market. But secondly, you're either going to see volatility and whipsaw price action, or you're going to see reversals. These happen all the time, and it happens every single day at the crossover, whether that's a London crossover from Far East Europe into London, or whether it's from London into the US. You will typically see markets moving in one direction. You'll then maybe get volatility, and then you'll get a reversal in place. So they are great opportunities for making money, which you know they're about to arrive, because the session crossover happens relentlessly every single day at the same time. So they're very easy to pick out and to pick off. And this is what we've seen on the euro. This is euro Aussie. We've seen that reflected. We've seen it on the CSI. We've seen it reflected on the matrix. It may not be a very dramatic move, purely because two things. First of all, we've got big news later on in terms of euro. And secondly, because the sentiment down here for the euro is still heavily bearish and likely to remain so. Much will depend on what Draghi says later on, of course. But you're starting to see that ripple through. And this is the trend monitor. Here it's transition first, and this is the reason we use multiple time frames. First of all, you see it here. Secondly, you're starting to see it develop here. But now what we've got coming into the market, we've got a volatility trigger. Let me just pull that up full size. There's several reasons we now expect the market to congest. First of all, we've got a volatility on the 3-minute time frame. So the anticipation is that the market is going to move inside the spread of that candle, because when we get volatility, and this trigger arrives in real time, it doesn't have to wait till the candle closes. What you're seeing there is a reflection of price action against average true range. In other words, the indicator is looking back over a number of bars, and it is gauging whether the price action has moved outside the average, the norm, if you will, through the prism of average true range. And when it does, you can be assured of two things. First of all, you're going to get volatility because the market has moved rapidly. And secondly, you're going to get the market makers who are in there. And that's the reason you see congestion building, or you're going to see a reversal. It's a trap move again, because what happens when you get a volatile move, volatility is about speed. The market moves dramatically. You can imagine it going on. It goes, shoots up. Traders jump in thinking they're going to make some quick bucks. What's happened now? They're all getting squeezed and wishing they hadn't made that decision. That's the power of the indicator. It is so powerful, so simple. It also tells you what's going to happen next, because your anticipation now is the market is either going to congest or it's going to reverse. There's another reason the market is going to congest and reverse at this point, is because we're at the volume point of control. This yellow dashed line is the fulcrum of the market. It is the point at which price agreement has been reached. In other words, the bearish and bullish sentiment is equally balanced. It's two people on a seesaw sitting there equally weighted. The seesaw isn't going to go anywhere because they're the same weight. It's pretty much the same here. We've got the same weight of buying and selling, so the market congests around the volume point of control. You can see the density of volume here. It's way out here. And therefore, it's another reason that the market is going to congest, because you've got a ton of volume sitting here. The market is purely going to congest and go sideways, confirmed by the volatility candle here. So what are you going to do for the time being? Well, if you're not in this position, you're going to sit here and wait. You're going to wait for a break to the upside. If you just break into the upside, go through this region here. You've got a low volume node here, little bit of volume here, but if it gets through here, then it's going to go up here to the upside with relatively straightforward, relatively easily. And that's how to read a chart. You've got exactly the same thing here on 1 minute. Again, you've got a volatility trigger. We're trading inside. You've got the support, and you've got the accumulation distribution indicator here. You can see it painting in real time. Very a strong region here, which is coming into play. You can see it's capped off this level here. We broke through, but it closed below. It's capped off this attempt to rally. So that's a very strong region of resistance. You've also got the volume point of control below. And moving to the downside, if the market breaks the downside after this little rally, then you've got pretty low volume all the way down through here, much lower here, and all the way back down again, a bit like snakes and ladders. So for the time being, the market's in congestion. Bearish engulfing candle there, engulfing the previous one. What have we got on 5 minute? Similar sort of picture. We've had the rally. We had some decent rising volume. That's okay. Markets rally. We've got a very strong level here of resistance, which has capped off the move. We've got other levels up and down the chart. You can see them here for yourselves. Trend monitor has transitioned. It's looking to transition to a darker red, but it certainly hasn't transitioned through to anything stronger than that for the time being. And now we're expecting, as I say, the market to congest at that level. Yep. Let me pass back to Anna at that point. I did promise. Let me just pull up the Aussie yen before we transfer over. Excuse me. This is the Aussie yen. I just pull up the daily. It's been fantastic. We've scaled into this position, and the reason we've scaled into this position is really because of this candle here on the 26th. An absolutely massive day, and ironically, it was a bank holiday in the UK. It really set the alarm bells ringing. A ton and a half of volume came in, big wick to the lower body. And that's where we started to get into the positions on the end, pretty much long universally. For those of you in the our private chat room associated with the program, I highlighted this yesterday, this extremely strong level of resistance which has been coming into play and is taking shape now. And I said 74 was the key level, and we need to get through that. We look as though we're going to break above that today, and that will give us a very, very strong platform of support in place for a more sustained move. But of course, much of that will depend on US sentiment. It'll depend on equity markets, depend what Donald says, etc., etc. But those are the positions we're holding at the moment and scaled in pretty much across the yen complex. Not all of them, but pretty much most of them. I'm going to pass back to Anna at that point.
Just a question about, can you hear me? Okay, about the change in yen sentiment. Really, the index you need to watch these days for what the market, the sort of shift in sentiment, in the mood in sentiment, risk on, risk off, is the S&P 500 on Globex. It was up, I think it was up 11 when we first started. It's now just up 5, so it's pulled back a little bit. It's very, very sensitive to what is happening in terms of risk sentiment, and it really depends on your time frame. If you're down, trading on the Renko and the 3-minute and the 12-minute charts, as I've got here, this is the combination here, then these fluctuations are going to be picked up. There's going to be a lot, let's call it noise. These fluctuations, you're going to see them, oscillate between risk on and risk off much more frequently. But if you look at the time frame that David was looking at on the Aussie yen, and look at on a longer time frame, on a slower time frame, it looks like there's been excuse me, heavy selling of the yen, strong strong buying of the Aussie. Now, what does that tell you over the medium and longer term? It actually tells you pretty much against what you're probably reading in the media, that there's some huge recession on the horizon, that the world is, the sky is falling. We've talked about the inversion on the yield curve, but the Aussie yen, the chart is actually telling us, it's giving us another narrative. It's actually telling us that, maybe there isn't going to be a recession. Who knows? I mean, listen, hey, who knows? We will have to wait and see. But in trading, first of all, you have to define your horizon. Your trading horizon is, how long do you expect to be in a trade? If you are a very short-term trader, you're only going to be in it for maybe minutes or maybe hours. Your position is going to be impacted by these fluctuations, by these sudden shifts of sentiment. It's like the wind. 1 minute it's blowing one way and 1 minute it's blowing another. A lot of traders, are quite happy with that. They will, happy to make money shifting their positions either side to reflect which way the wind is blowing, as it were. When you look at the slower time frame charts and you look at sort of the more macro picture, if you like, you think, well, what is that narrative telling us? So, as I said, it really comes down to your time horizon. Now, the reason I've put the euro dollar up, as I said, we were talking about euro because of what is happening later on today. There's a couple of things I'd like to highlight here. As we looked at the daily chart earlier, we looked at the buying that came in under this hammer candle, VPA signals. They will come in, but the development of the signals, they can take time. It's not always on the subsequent candle or even the candle after that. What tends to happen when you have a lot of stopping volume coming in after a downtrend that we have here, that's the stopping volume. As David always uses the analogy of the tanker, it takes time to turn that sentiment around. We have a little bit more buying under this candle, and then often it will go into a period of consolidation. Sometimes you have a test to see whether all the selling has actually been absorbed, and then you have the strong move higher. I think you have that on the Aussie yen probably much more clearly than you have here on the euro dollar. But let's look at this in terms of, let's set aside the ECB. We know the ECB is later, but just looking at a trading opportunity on the faster time frame. So that's the picture that we have on the daily. This is the 3-minute chart, which it's one of the time frames I use for when I do trade these faster time frames. I use the Renko, the 3 minute, and I either have a 6 and a 12-minute chart as well. What's interesting here in terms of price action is this is the Europe Open, and I can see that because it says 9:09 on the trend monitor. This is 2 hours ahead, so this is 7 o'clock basically. This is coming out of Asia and then before we move into Europe. But prior to that, can you see the congestion around the volume point of control? The euro dollar is not a hugely traded pair during the Asia session. The euro will be traded, but it will be more likely to be traded against one of the local currencies, either the yen or the Aussie or the New Zealand. That's just something that you have to recognize as a trader. So there it is in congestion, waiting for the European Open. It did pull away. We had volatility. Tend to have volatility around the crossover session. So we had it there. It back to test the volume point of control, volatility candles, and then the move away, then the breakaway from the VPOC actually started. Now that is reflected on the Renko chart. The Renko chart is fantastic for explaining price action. Price action does what we say it does one of 5 things, don't we, David? But basically it does one of 3 things. It moves up, it moves down, but it spends an awful lot of time in congestion. This is where support and resistance comes in. We have the indicator on MT4, MT5. It paints the price-based support and resistance, either hatched line or a solid line. A solid line means the resistance or support is much stronger. It's been tested on a number of occasions. We can see here, we've got it here, got it here, here, and in fact it actually bounced off this level here. So this is the move lower. at the open of the European session. How that translated onto the time charts is we had this move lower, then we had another hammer candle come in with, that is a reasonable amount of volume given that London hadn't actually opened at that point. When you read volume along on the chart, you have to take account of, when did that occur? Is that at a crossover? Is it at the London Open? So the London Open will always generate much more activity because volume is activity. So we had this hammer candle and we actually had the start of a really nice move higher. It was also picked up on the CSI. This is actually the 6-minute CSI. You can isolate all the currencies out, so you can take out the ones that you're not particularly interested in, so you can track the what's been happening with the euro. Let's turn that off. The euro and the dollar. The red line is the dollar. This is the sharp fall. This is the sharp fall in the US dollar. Now, what's interesting is the move at the moment, the dollar is kind of coming to the end of its move lower, and it's probably, you'll see that turn in the dollar in some of the other pairs. This is really being driven by the buying of the euro, as I said, ahead of the ECB. So that's what the CSI was telling us. Then we go back to the 3-minute chart. As I said, we've got the buying coming in here under the hammer candle, and we moved high. This little bit of a pullback here, I've got the Camarilla up here at the moment, and you can see here the R1. Between the R1 and the S1 here, that's what we call the buffer or the neutral zone, and where we tend to have a lot of congestion. It's actually reflecting what has been happening over in Asia. But this little pullback here that we had during at the open of the London session is, again, it's a lot of volume coming in. We had a down candle, but it had a nice wick to the bottom of the candle, actually bounced off the volume point of control. This acts as a very strong region of support and resistance, but it's volume-based support and resistance. And in fact, once it's cleared the highs of these two candles, it's now carrying on higher, and we have to sort of look at the slower time frames to tell us where it is likely to be heading in terms of a target or an objective. If you look at the same price action on the Renko, it really hasn't flickered, because that's what the Renko does. It helps to get you in, but it also helps to keep you in because it absorbs all those fluctuations. If we look at the 12-minute chart here, which is what I'm benchmarking what is going on the 3-minute chart, I can see why there was this pullback. This was around the London Open. What happens with volatility? The price retreats to within the spread of the candle before it decides whether it's going to go up, carry on higher or not. I'm going to have to reduce this down to give me an idea of where we're likely to be heading to with this particular move. It's also a move away from the VPOP. Let's move up to an even slower time frame. Let's move up to the 20. Yes, let's see where we've got some. In fact, we've got a lot of, a fair amount of clear water coming up for the euro dollar. So there's absolutely no reason, just to let this position run, as it were. Now, there's another reason why the euro dollar is on the move at the moment, and it's to do with the option market. Now, I've mentioned it in our forum, and I've also mentioned it in on my Facebook page. Over at Forex, over at investing.com, there's a really, really cool tool, and you have to put in, I've actually got the UK version, but it doesn't matter, ukinvesting.com, currencies /forex-options. And even if you know nothing about options, don't worry. In fact, we're going to be looking at options some way down the line, both for Forex and for stocks and indices. And what you have is this little table. And it's basically, what is the option market? What are they telling us about what they think is going to happen in the price action with all these pairs that are listed down here? Now, I've pulled up the euro dollar. I've got overnight. You can have overnight, a week, 2 weeks, and it sort of goes up way up to 12 months. But forget those. Let's just have a look at the overnight data, if you like, for the option. What is the option market telling us on the euro dollar? And the figure we have to look here is this one, is the implied volatility, and we want the current figure. And we can see here the current figure is up at 17 and 18. What that tells us in terms of the price action that we're seeing in the spot market is that there is a lot of activity, that it's going to be quite volatile. Volatility doesn't always mean it's a bad thing. It means that there is, the price is going to move, and is probably going to move in a pretty big way. When we compare it to what it was doing a week ago, and we can see here it was down at 7, often you will find, in fact not often, you will find the price action will be quite constrained. So if the euro dollar is, the pair that you like to trade, hopping over and seeing what the overnight implied volatility number is can give you a sense of whether, in fact, you are, the pairs actually, there's going to be some movement in it, because euro dollar can be very frustrating, because often it can be, trade in a very, very narrow range. And if you're trading on a daily basis, and you're trading on it as an intraday trader, hoping to take a few pips here and there, having the implied volatility at a very low level, it just adds that extra layer of trickiness, as it were. And you can check the figures for the pairs that have options on them. It's not all the pairs in the market. So if you look at dollar yen, what is the current? Look at the blue line. Well, it's down on 8. Let's have a look at the cable at the moment. What's interesting with cable is the blue line is actually rising. Last week it was falling. Always look at the implied volatility, and just look at the current, and look at the overnight one. There's lots of other ways you can use the options data to actually figure out what the number of pips might be that it's going to move on a day. There is another volatility calculator on investing.com, which also tells you based on previous data, the best days to trade the different pairs, and even the best sessions where you are likely to squeeze a trade out of the various pairs. So a nice little tool, well worth investigating, and you'll find more and more in commentary on Forex. Commentators will be referring to what is the implied volatility for the euro, the British pound, etc., etc. If you look at the euro, now the euro is here as well, which is quite nice. The implied volatility is 17.18. Now that tells me there is going to, it tells me there's going to be a move. There is a way, by looking at the puts and calls, is it going to be more likely to the upside or the downside? But as I said, that's not the scope of this webinar. Is there anything else you want to add to that, David? No, that's it. Any more questions? Anybody has? Yes?
Sorry, yes, just one thing.
Sure.
Sorry, just one thing to add to that. I think you've got your mic on. Sorry, darling. Thank you. Sorry. Just one thing to add to that. When you're looking at the currency strength indicator, as Anna was there, in terms of the euro and the euro dollar is probably not the best one to trade, purely because the fact that dollar is at the bottom of the indicator and is therefore oversold. So just from a very simple perspective, if you're looking at opportunities, the ones you really want to look for is ones where you've got, as you can see there, the dollar is very oversold and therefore at the bottom. The euro has been rising quite strongly. And if you were looking at this as an opportunity, then it's trying to find that balance where you've got, I would say, in a very simplistic way, equidistant travel for the pair under consideration. So if you're looking at this, for example, your euro dollar, euro CAD there at the bottom, then that's probably not the one to look at, because one of the currencies has got to an extreme. So in terms of you jumping into it, if you're looking at this for a potential trend, for example, what you're looking for is where maybe you've got a cross in the middle of the indicator. So you might be looking at sell on the pound, for example, and continue buying on the euro there. Then that's got more potential for travel, purely because if the two currencies continue to move in the same direction, there's no guarantee they will, of course, but if they do continue to move in the same direction, then the amount of price action is likely to be far greater where you've got both currencies working together, as opposed to, in a euro dollar example, one of the currencies has actually come to a pause point. If I go back to a train analogy, I suppose it's a little bit like one train is moving and the other train is pulling into the station. It's that kind of thought process. So all I would say is, if you're looking at extremes, obviously that's very straightforward. You're looking at those currencies which are overbought and oversold. But if you're looking to jump into a trend, in other words, where that trend is already underway, try and pick off the ones which have some travel left in them, rather than where you're perhaps looking at one currency which is already a little bit exhausted and getting to a potential reversal point. I just wanted to make that point. I'm just going to pass back to Anna.
Just to return to the euro dollar again, as we can see here, we've come to a little pause point. We can see here we've got a pivot that's been fired by the pivot indicator, telling us to expect a minor pullback. And what do we see on the chart here? When you have high implied volatility, you will find how that is reflected in the price action is a lot of wicks to the candle. So it is picking up what the option market is telling us, and being aware of that and taking advantage of it. You know, if you understand how volatility works, what is it telling you, what is, you know, potentially signaling to you that any move that you're going to be in, it's going to be tricky, in the sense that, you know, you've got to watch your stops. Maybe you've got to allow your stops to be that little bit wider. And as soon as you know, the volatility kicks in, volatility also gives things momentum. And if it's going in your direction, move your stop closer, and then, you know, let the market take you out, as it were. But what the implied volatility numbers do is they give you a sense of what to expect in terms of the type of price action to expect in the session coming ahead. And, you know, you can do the exercise for yourself. You can, you know, it gives you what it was last week. So you think, oh, well, what was it like last week? We tend to forget, and you look back and you think, yeah, it was a bit grindy last week. You know, you might have, you know, pips would have come, but they weren't, the price action wasn't characterized by a lot of pullbacks, a lot of, you know, shakeouts, whipsaw price action. Because, as I said, trends, there's different types of trends. There's trend with volatility, trends with no volatility, there's congestion with volatility, there's congestion with no volatility. And really, how you pick that up is, well, first of all, you understand we have a volatility indicator that triggers in real time to tell us that, you know, the market is kind of, you know, it's moving, but it's moving and shaking at the same time. And you can have a look at the implied vol figures over at investing.com for your currency pair, and you think, yeah, okay, it's going to be a bit of a bumpy ride today. That's really what it is, isn't it, David? Yeah. So it's going to be a bit of a bumpy ride. You're going to get there, but you know, it's going to be a bit of turbulence. It's like being on an aeroplane with turbulence. It's not going to be a nice smooth ride. And, you know, forewarned is forearmed, as they say. Well, this doesn't look as though it's ready quite to roll over. There's a bit of congestion coming up. Let's see where a potential target. We've got the R1. Let's go on the Camarilla. I suppose this is where these is. It's 1022. Where are we at the moment? We are at 10. Let's move. 10 what? 10.16. Oh, right, fine, okay. But we can also see here we've got this resistance to get through. We've got to get through 10.18 if that is going to carry on higher, and if not, it is going to reverse. And again, everything will be picked up on the CSI. We can see here the dollar is beginning to turn over. Let's see which pairs are actually been moving. And in fact, on the matrix, we can see the euro pairs. They're all kind of shifting now. We've got the euro Aussie has actually been the best of the euro pairs on a short-term basis. And that's really how we've developed the indicators to work with us with volume price analysis and combine it with all the other information that is out there to help us as traders. Anything else you want to say to that? Brilliant. David's giving me the thumbs up. Right, it's going to be a great day today. We are back later on at 3:15 after all the fun and games have ended with the ECB. So whatever we've said this morning, we will either be 100% right or 100% wrong. So we'll see what happens. If you've got any questions on anything we said, either to do with the volume price analysis, the indicators, you want more information, you can either drop me a line, anna@annacooling.com, or you can drop David a line at david@quantumtrading.com. I hope you enjoyed coming along today. I hope you've learned something that perhaps you didn't know before. And we will catch you, well, if we don't see you this afternoon, we will catch you next time. Not sure if this chat is right. I need to ask you. Okay, Melinda, as I said, if you send me an email at anna@annacooling.com, I'm more than happy to answer any questions that you, or help desk at or david@quantumtrading.com. And it's lovely to have you join us today. I hope you've enjoyed it, and we hope to see you again. So you okay? You doing? Oh right, David's just popping the email addresses into the chat box. Okay, brilliant. And if you're not joining us this afternoon, have a great trading day, the rest of the trading week, and we'll catch you next time. Take care. Bye.